Okay, so in this particular slide, in this particular clip, that is, we are going to discuss purchase journal. The purchase journal, when we are talking about it, it again, just like the sales journal, which records all the credit customers, this is going to record all the credit suppliers. Now, the credit suppliers are the people from whom we have bought the goods without returning money to them, without giving money to them upfront. We have promised them to pay in future, and we need to keep track of their details, that how much is supposed to be paid to them, so that in future they are not going to ask for too much or beyond which they deserve. So we are going to basically maintain a journal or a day book which is going to keep track of all the credit suppliers. Now, similarly, we discussed the calculation in the sales journal. It's going to take place in an identical way. Now, the list price is 200, the trade discount is 20%, and cash discount is 10%. 20% of 200 is 40, so 200 minus 40 is 160. So after subtracting the trade discount, we get the value which is being charged to us as purchases. And from purchases, then we are being offered a further cash discount for prompt payment, and that money is 10% of the remaining amount, which after subtraction from trade discount. So 160 minus 16, 144 is the final payment which is supposed to be made by us to the supplier. Now, one thing which needs to be understood here very clearly is that when we are subtracting the trade discount from the list price, that gives us the actual value of purchases in this case, and if we are talking about sales, then the total value of sales. So the total value of purchases made by us is 160. So when we are going to be talking about how much is the value of purchases, then the value of purchases is 160 here, and payment that is to be made by us, that will be ascertained, that will be calculated after subtracting the cash discount. So there are three different types of values that we need to be dealing with. Number one, list price, which is the price which is conventionally charged by the supplier in this case. Then there's a price which has been ascertained after subtracting the trade discount, that is the value of purchases. And then there's a payment, there's a value which is the final payment to be made to the supplier, that is 144, and that is the cash payment or bank payment made to the supplier, which will be recorded inside the purchase journal. So if you are being asked about the list price, it's 200. If you are being asked about the value of purchases, that is 160. And if you are being asked what is the payment that is to be made to the supplier, that is 144. So these are three different figures which need to be kept in mind, especially while going for the MCQs. Multiple choice questions are going to ask you these type of questions, certainly, where your concepts are going to be tested. So yes, you are going to record all the suppliers separately, and when the page ends, when the purchase journal page is going to end, you are going to make a total of the page, which in this case is 170. So this is what purchase journal is all about, and we are going to discuss return journals in the next clip. Thank you very much.